The watchword for the lower end of the market is inventory. There's not a lot of it, doesn't appear to be much more coming on, and it's having a noticeable impact on sales. Hi, this is John James with the James team at RE/MAX Partners, and we are now ready to segment the real estate market and look at how different price ranges fared for the month of October 2021. Let's start off with the $250,000 to $750,000 price range and kick it off with our three main indicators. The median sales price is always the indicator everyone wants to know. For this October, that price range that finished at $454,750, that's up 1.8% from the $446,750 last year. It's not a big increase, and interesting when you realize it's the second straight month-over-month decrease we've had in the price. So October's price was lower than September, which was lower than August. And in a normal market, I wouldn't be as concerned with the price changing month over month, just because there are too many variables to adjust for in that short period of time. But those variables didn't mean much over the last 18 months as the market was going up. So it's good to use this to see where the high was. And, we can see also in the number of sales. Number of sales is down 4% from 592 to 566 in a year. That's the first drop year over year we've seen since June of 2020. And of course, it goes to lack of supply. And with not much increase in a price and a drop in sales, it stands to reason that the total dollar volume would be lower as well, which it is. Our total volume in this price segment for October was $268,253,760, 3% less than the almost $278 million last year. And normally I would highlight the drop in month over month, but the year over year drop is significant because it's not driven by a smaller demand. On the contrary, demand is off the charts. The median number of days on market has dropped to 6, where it was 29 days last year. And I thought 29 days was short back then, and now it's decreased by 79%. You know what 29 days is short for now? That's the time it would take to clear out inventory in this whole segment. Last year, it was 3.3 months. And the number of active listings on the market, which last year was 142, has now dropped 68% to 46. And there's not much filling the void. The number of new listings is down 18% from last year, from 614 to 502. And on the chart that shows us their range they use is from 500 to 1,000. They're going to have to change the numbers for the y-axis on that. So the demand is high and the supply is low. That's Econ 101. Regarding value, this is the third straight month where median close price is matching the list price, 100%. It's also up 1.8 points from over last year. So this shows that demand is still there for buyers and it isn't going away. And the most consistent indicator is price per square foot. I don't look at it to see whether or not it goes up. I look to see how much it does. And this year, more than ever, with inflation increasing, that's going to be an issue. Price per square foot increased to $425, which is 21% from the $351 last year. Now, this environment, you might think that price reductions aren't happening, but you would be very wrong on that. There are 52% more price reductions than last year, 11 to 23. And it's not just year to year. There were only 14 reductions in July of this year, and they have been steadily increasing. And here's where it comes down to pending listings. They have dropped from last year's 607 to 504. For the first half of this year, pendings were going up and up and up. Now they're 17% off. And not as many new listings equals not as many pending listings, which eventually leads to not as many closed listings. We can think of this as regressing to the mean. Does this trend continue in the other price segments? Well, you can tune in and see. In the meantime, I would love to hear what you have to say about it and what's happening with the market right now. Call or text at 970-846-0797. Email at johnjames@jamesteamsteamboat.com, or leave a comment in the video. Washington will say hi. And we'll see you for the next time in the middle of the market. Until then, take care.